This is how you can save $80,000 in the next 10 years. Check this out. I'm a 40-year-old woman and I don't have a retirement, and I want to be aggressive and save at least $80,000 in the next 10 years. This is how I'm going to do it. Through an IUL policy, which is an Index Universal Life Insurance policy. I'm going to save $500 a month, which is $125 a week. I spend that much at Starbucks, so I think I could make it happen. This is how I'm going to do it. I'm going to use the minimum death benefit and the max cash value in this IUL illustration, which means I'm only really getting this IUL policy because of the tax benefits and the compound interest. Okay, so while I'm setting up this illustration, I'm going to put $500 as my monthly payment, and the system is going to generate a death benefit amount for me. Okay, so that death benefit amount is $139,000. So at $500 a month, I'm going to pay roughly $6,000 for the year in life insurance. Now, you do not want to go over that $6,000 is because it's going to turn into an investment account. And in order for this to stay a tax-free account per IRS code 7702, go ahead and Google it if you want, you are allowed to put money into a life insurance policy as long as you don't turn it into an investment account or launder money. I'm going to show you the first 10 years and how much money I have. If we go to age 50, it shows that I have $79,644. I'm going to round that off to $80,000. This is compound interest. If you look over to the right, you see a death benefit amount of $145,000 starting out at year one, because it takes the cash value and it also takes the death benefit amount and it increases every year, which means in the event something happens, your family do end up with both. If it was a whole life policy, your family will only end up with either the greater of the two. If the cash was more, your family will end up with the cash. If the death benefit amount was more, your family will end up with that amount. With an IUL policy, we can set it up where your family gets both. Okay, you paying for two products, you get two products. Now, this is how we calculate the death benefit amount, which is the insurance premium. I'm going to take the accumulated value, which is the $5,238. That is how much is going towards your cash value out of this $6,000. And I'm going to subtract that number from $6,000. It leaves me $762, which is the yearly premium amount for the $139,831 death benefit amount. If I take that number and divide it by 12, that's a monthly payment of $63.50. That's actually not bad for a policy that's going to last the rest of your life. You're only paying $63 in insurance premium. Now, out of that $500 payment, $436.50 is going towards your savings every month. Every month you're saving $436, and it's compound interest. Now check this out. So for the first 10 years, you can pull money down off your account. However, we do not recommend it because you will pay a penalty for pulling money down. At the end of year 10, which is year 11, you're going to have $90,327 in this account. You can pull that money down. We always recommend that you do not empty the account, because if you do, the account is going to close. So at year 11, your family is going to have $230,000, roughly around $230,000. In the event if something happens, they're going to get the cash and the death benefit. That's actually not bad, guys. This is how you create generational wealth. And if you're starting a retirement account late, this is the way to do it. At age 55, you're going to have roughly around $140,000 in this account. Around age 60, you're going to have $220,000 $2,000 in this account. Age 65, you're going to have $333,000. Age 70, $489,000. Let's keep going. Age 75, you're going to have around $700,000. At age 80, you're going to have $985,000 in this account. Let's keep going. At age 85, you're going to have $1.3 million in this account. You're going to have a death benefit amount of $1.5 million. Here are my favorite things about the IUL policy. Number one, you get compound interest. The max is 12%. The low is 0. If the market crashes, your money is safe. You don't lose anything. However, if the market hits 18%, you only get that 12. Number two, I did this illustration at a modest 6%. However, if the market hit 12, guess what? You're going to get that 12%, which means this money that I'm showing you now is going to double. It's going to be way more than what you see now because the illustration is set at a modest 6%. Number three, the tax benefits. You can pull this money down tax-free. You heard me. Tax-free. Thank you, IRS. We love you. Number four, if you had $100,000 in this account and you had a death benefit amount of $150,000, if you were to pull $50,000 out this account, guess what? You still would get compound interest on $100,000 because that $50,000 will actually come off your death benefit amount and not your cash value. So still every year, this account is going to show that you have $100,000 in it. You're welcome. Reason number 5. If something were to happen and you did pull money down, you are making a monthly payment, and your beneficiary end up with the proceeds of your IUL account, your beneficiary is not required to pay that money back. It's just going to come off of the death benefit amount. That's it. You're welcome again. Now, if you want one of these IUL policies, or if you want me to do an illustration for you so I can show you what your account will look like in the next 10, 15, or even 20 years. Let's say you're not starting retirement late and you still just want an IUL account so you can have a second vehicle to save and move money around. My name is the Shark and I'm your girl. You can call me 773-900-6659. You can text that number, you can call that number, or you can email me. info@thesharkinsuranceagency.com, or you can just go to my website, The Shark Insurance Agency. I have a link at the top. You can click on to book an appointment, or you can go down and you can actually just fill out the application. I'll get it. Someone from my team will give you a call. Now, here's the best part. In your mind, you're like, oh my God, Shark, how am I come up with $500 extra? I'm already pitching pennies or stealing from Peter to pay Paul. We're looking for agents. You can actually become a licensed agent in your state. Our part-time agents work from home. They make anywhere from $2,500 to $3,500 a month, working less than 10 to 15 hours a month. I didn't say a week. I said a month. Take that extra money you're using or making. Take that extra money you're making as an agent and put that money into your IUL policy and start your retirement. You're welcome. Oh, subscribe to my YouTube and save this video. Thank you. Bye-bye.